Good afternoon from the UAE. Thank you very much to the TADAT Secretariat for the opportunity to have our second international panel within the framework of the TADAT-CERT Tax Administration Best Practices Program. Today, we have two experts in taxation and tax administration from the region, Ms. Damacrine and and Dr. Julius Yiega. Ms. Damacrine, who will take the floor first, is an expert in academics and corporate research at the Kenya School of Revenue Administration. She has an extensive experience in corporate monitoring and evaluation, as well with the Kenya Revenue Authority. For the past 14 years, Ms. Damacrine has been responsible for all the aspects of data cleansing and data governance and business analysis for the domestic tax system. Her participation, particularly in the scholarly contributions of taxation in Africa, are notable. She has published topics related to domestic resource mobilization for the Sustainable Development Goals in Africa. And she has also participated and published in the Graduate Institute of Geneva and published for the Forum of African Women Educationalists. Ms. Damacrine is also a recurrent TADAT instructor. She's a TADAT assessor herself, and she has delivered TADAT training in Rwanda, Zambia, Somalia, Uganda, Ghana, and Tanzania. Her experience delivering TADAT training includes not only technical training, but also TADAT senior leadership training to tax officers. So, Ms. Damacrine, we are very pleased to have you here, and I would like to hand the floor over to Mr. Abdelhamid Attalla, who is our lead faculty in the Tax Administration Best Practices Program, who will be facilitating this session and conveying some of the questions of the team. Thank you very much for being here, Ms. Damacrine.
Thank you so much, Dr.
Thank you very much, Dr. Grace, and welcome, Damacrine. And it's a great privilege to have you with us today with your substantial experience in taxes in Kenya and in Africa. I think we have a lot to learn from you today. I am also honored that I have visited your country several times when I was in my previous employment dealing with tax issues. Kenya is one of my dear countries, very beautiful country, very nice people. And I have two great friends who are in the tax practice, Job Kabuchi, who's the head of VAT in PwC and Africa, and also Maurice Mwaniki used to work in Revenue Kenya. If you ever meet them, please give them my best wishes. But thank you very much for joining us today. And we have, as I said, a lot. I mean, we don't have a lot of time, but I think we will, try to get as much of your experience and knowledge today, especially here in the UAE and in the GCC countries and the Middle East countries with the imposition of new taxes, including VAT, excise tax, corporate tax was always there around. But I think with VAT and excise tax, these are new, and the setting up of new tax administrations in countries which do not have tax, like in the UAE and Bahrain. We have in the TADAT course a lot of topics, but the two ones which we're dealing with today are POA4 and POA5. And they are basically very important and vital because I think when we are reviewing the training material, it is something that we deal with on a daily basis. And I think all countries have challenges, especially how do you get people to file tax returns, how to make it easier to file tax return. It's not just about this is the law says you have to file. Well, that's great, but you have to facilitate for them to pay the tax returns, file tax returns on time, different segments of the community, and POA5, which is about making payments, making sure that people pay on time, but also facilitating for them to make the payments. In some countries, there is still manual. You have to go and deliver a check to the tax administration, and they wait until the tax is cleared, etc. But I think things are changing a lot with electronic filing, electronic payment of taxes. And so the first really point we wanted to discuss with you, what strategies have you seen or you recommend for countries in order to facilitate the tax filing of returns and to make it an easy process available to the community of taxpayers, not just the large taxpayers who are sophisticated and have teams of lawyers and accountants and all that, but also the common man, the man of the street, or the small trade, the small business, the medium-sized business, that they can go in, file the tax returns with minimal, I wouldn't say minimal effort, but at least without a lot of pain, a lot of trying to get information and confusion about how to file tax returns. How would you basically explain to us, what you have seen and what do you recommend based upon your experience?
Good afternoon, good evening, and good morning to that Secretariat. First, I'd like to thank Mr. Zaki for organizing this and for just the TADAT platform that makes it wonderful, makes it easier for tax administrations to operate and enhance our revenue management systems. Dr. Grace, thank you so much for this opportunity. And Mr. Attalla, I am glad that you have been in Kenya, and I will definitely pass your regards. So on to the question that you have raised. First, I'd like to start by just giving an overview of what is very critical, what we are referring to as TADAT linkages. And this is, the TADAT linkages is just, from a tax administration point of view, how our processes are interlinked. So for instance, right from the registration process to the filing and to the payments, how does the registration affect the filing? How does it affect the payments? And how does Performance Outcome Area 3, which is supporting voluntary compliance, how does it have an impact on the filing and on the payments? So TADAT linkages is critical, and I am very glad that the TADAT Secretariat, the head of the TADAT Secretariat, Mr. Justin Zaki, put together a team, and they did some machine learning, through machine learning algorithms, were able to identify the linkages between the different performance outcome areas. Right from performance outcome area 1, how do we register a taxpayer? How do we monitor compliance risks? Then to supporting voluntary compliance, to filing and payments, all the way to POA9. How do we interlink? So the gap that we have had before, and I'd like to start from here, because when we as tax administrations, from my experience in KRA, when we first automated the filing and registration and payment process, we went in it without looking at TADAT, performance outcome areas, and we went in it without looking at these linkages. Then along the way, you realize there are various gaps, because when your data is not accurate, for instance, when your register is not accurate, then you are not able to tell what to expect in terms of filing. How many returns should you expect? So when you're looking at the non-filers, which is performance outcome area 4 as well, what strategies will I use to reach out the non-filers? Now, when you go back to POA1, if you don't have adequate information of these taxpayers, when it comes to your non-filers, you are not able to adequately reach out to these taxpayers. So first, I'd like to say it is very critical. And as we go along, I'll keep talking about the linkages. It is very critical for us to have an in-depth understanding of these linkages, how one process leads to the success of the other process. So I'd like to first start by saying that performance outcome area 1 is critical in the success of performance outcome area 4, returns filing, and payments. So I'll move to the experience, and I'd like to welcome Dr. Yiega, who has joined us as well. He will add on to this. Our experience in filing and payments from a KRA perspective is that I mentioned we moved from a manual platform and then we moved to an electronic way of filing. And initially we started with targeting the large taxpayers, but eventually we rolled it out to all the segments. All the segments. Now, when we moved to the electronic platform of filing, what we tried to do is we tried to use various initiatives, which is performance outcome area 3, try to make it easier for the taxpayer to file. We tried to make it easier for the taxpayer to file. So what we did is we also engaged the banks so that once a taxpayer files a return, they don't have to go physically to the bank to make a payment. All they need to do is generate a slip and they can make the payment from the comfort of their desk. So performance outcome area 3, that linkage between performance outcome area 3 and 4, we had to make it easy for the taxpayer to file. So we simplified the filing process, and for employees, we just made it auto-populated. Let me explain what I mean by auto-populated. If you're employed, what we need you to do is just log in and look at a pre-filled return. Your information is already there. We have collected it from the employers. So you just confirm what was deducted from you in terms of pay as you earn, confirm it. Once you confirm that, you just submit the return. So we auto-populated it. What we still expect from the taxpayers is those who have businesses and rental income, they still have to fill in a return and upload it. But we adopted a payment gateway system with the banks in terms of payments. Now move to performance outcome area 5 in terms of payments. We adopted a payment gateway system which is integrated to iTax. So as soon as a taxpayer files a return, they then go to their ledger and generate a payment slip. Once they generate a payment slip, we have all the banks listed. They are able to select their bank, and then the system will generate a payment registration number, which they will then use to make payments. So they can make payments through mobile platforms, or they could make payments through their banks, but this is an e-platform. But as I mentioned earlier, we went in it without looking at those linkages. So then the accuracy of the taxpayer register. Upon the registration of the taxpayer, did we allocate the right tax obligation? Because then if a taxpayer is registered, when they are registering without assistance, they select obligations, for instance, VAT, pay as you earn, yet they are not supposed to be registered for VAT. What happens is that every month the system will expect them, the system will at the end of the due date for VAT, it will expect the taxpayer to have paid or to have filed a VAT return. But because the taxpayer did not know and selected it erroneously, that brings an issue of inaccuracy in the taxpayer register, which then brings an issue in the filing, because we are expecting a return from a taxpayer who should not be filing VAT. And in turn, this has an impact in the debt portfolio, because under that taxpayer's account, what will happen is that a penalty will be issued to the taxpayer. And after the penalty, then we'll also expect the tax due for VAT. So what happens is that this continues, this is accruing, and what happens, the impact in POA5 is that we end up with erroneous debt portfolios. So it is very critical to look at, I appreciate that we're looking at POA4 and POA5, but it is very critical to look at it from the linkages of these processes. Have an accurate and adequate register. That is where to begin. And then look at, after you have your adequate register, out of my register, who am I expecting returns from? Do I have accurate information? Okay, fine, I have the accurate information. What strategies am I employing to make it easier for these taxpayers to file? So that is performance outcome area 1, 3, 4, and 5. Now we have an interesting segment which we call the informal sector, and Dr. Yiega will talk about it because this has been an area he has been managing for quite some time. The informal sector does not find it easy to log into a laptop and file a return. Really, this is someone who's operating informally, and they have small businesses. They don't have time to go to a machine and file a return electronically. So what we did is we simplified it further, and Dr. Yiega, I'll hand this over to you so you can talk about the small taxpayers, is that we introduced a mobile app and used a USSD code so that it is very simple. That the taxpayer only has to dial a few numbers, a USSD code, and submit a return or submit a payment. So I would like to leave that to Dr. Yiega so that he can go further into how we have simplified it for the informal sector. But I'd like to mention that for the large taxpayers and the medium taxpayers, especially for the large taxpayers, we fairly expect them to be compliant with filing and payments. So the challenge here is with the small taxpayers. But I'd like to stop there for now, and then I'll add on later. But Dr. Yiega, Dr. Julius Yiega, please welcome. And maybe as Dr. Grace introduces you, you could start with just how have we made it easier for the informal sector to file and make payments? Thank you.
My name is Julius Yiega. As has been indicated, my able colleague, Damacrine. Thank you for standing in very fast when there was a bit of the delay. I'm humble for that. Now, and I'm very happy that Damacrine has actually brought in the aspect of linkages between POA1, POA3, 4, and 5. Those are very critical. And as one who has been heading taxpayer services, it is very important that we understand why POA1, POA3, 4, and 5 are so fundamental when an institution of a tax administration is interested in seeing to it that the good international practices are implemented as per the TADAT tool. And I'm happy that she has brought in the idea of the informal sector. Informal sector is one area that has been a bit of a challenge to us. And why is this quite a challenge to us? One, you will always remember that the informal sector do not have what I would call fixed abode. You know, some of them move from one place to the other in terms of location. So you may be able to find that you've registered them in a physical location A, and the next day they have moved to physical location C, really or totally out of town. And that became a bit of a challenge. But something else then cropped up, because as Kenya Revenue Authority, we also involve the people we refer to as stakeholders. That is, we treat informal sector as part of our stakeholder engagement. So normally when we meet them and engage them in terms of communication, and that of course is being linked to POA3, you understand the bit on voluntary compliance. The taxpayer will not be able to voluntarily comply when they don't have the right information. So what did they tell us in our engagement? One of the things that the taxpayers wanted us to do is to give them what I would call a dedicated team. I want to repeat that, dedicated team whose mandate is to take them through their tax obligations and the respective tax heads that they need whenever they are trying to file or register to be taxpayers. And I'm very happy that Damacrine did indicate this, that you will always remember that when we went to do automation, one of the areas that became a bit of a challenge to us, and maybe this is a point to note, is that the level of, I would call it IT literacy the IT literacy. Everybody takes it very ordinary that everybody knows how to use the system, that anybody can use a laptop, anybody can use a smartphone, but that should never be taken for granted. So due to that illiteracy level among some of the informal sector participants, we had a bit of a challenge on that. And so how did we make it easier for them? Because my colleague Damacrine has indicated to you the ITAC system that you have to do technological oriented in doing all this, but the informal sector had a scenario where we needed to approach them differently. So what did we do? And I'm happy Damacrine did mention to you the USSD. So for example, in Kenya, we have people with smartphones and those without smartphones. So when they don't have a smartphone, they simply make use of the USSD, which is *572#. That is our USSD. And by the way, I know that this group is targeted so that for the sake of whatever we are doing, those are public information, which is not a problem to anyone. Even if you come to Kenya, Grace, for example, if you visit Kenya and you want to use our USSD, you will definitely dial that and it will work out for you. And so normally when we do that, what normally happens is that USD gives the taxpayer several options. Option number one is the PIN application. Yeah, PIN application will be given to the taxpayer through that USSD. Then they'll be given file return as another second service that they can select from. Then they also have option 3, which is payments. And you can now see how that USSD is being linked to the linkages we're talking about. The first one is PIN application. Of course, that is POA1, the registration. Then when you talk about file return, that is now POA4. And when we talk about payments, that is now POA5. And then finally, under the same USD, and I can mention here that why I'm giving you this information is that the taxpayer can only understand the operation of the USSD when POA3 is really magnified. And POA3 is where we are giving them things to do with the taxpayer education. We are giving them the information. We are engaging them, yeah? And within that, those are critical things to appreciate as those who are coming up with an institution that you want to come up with. Now, lastly, on USSD, I wanted to mention this bit. We call this, the other, selection there is TCC application. TCC stands for Tax Compliance Certificate. Damacrine, I hope I'm right up to that point in time. Yeah? Tax Compliance Certificate. Yes, thank you, Damacrine, for the confirmation. You will realize that during that time when you are registering, and Damacrine mentioned this earlier on, that when the taxpayer is registering, they may add themselves an obligation which they don't deserve to have. For example, the taxpayer might have picked a VAT obligation when his turnover does not qualify him or her to pick that obligation. I hope you've not lost me. I've indicated to you why the USSD is critical for the informal sector. Why? Yes. It is something they can do online. It is something on their hand. They simply touch it and they are able to get all the options that they are picking from. Now, I think that would be good enough for that. But now let me explain the TCC bit of it because it is fundamental. Any taxpayer, for them to be cleared, for them to be said that they are tax compliant, they apply through our system on tax compliance certificate. If there's no any outstanding obligation in terms of debts, in terms of outstanding debts, then the system will generate the tax compliance certificate. And why is that TCC within the USSD, which is the fourth selection, is important to us? In our country, to ensure that there's compliance, apart from the voluntary processes, we engaged other institutions that whenever you want to go and, for example, open a bank account, for example, you want to do something like that, they will ask you for a tax compliance certificate. And that is fundamental. Now, you can see that also from the perspective of bringing more taxpayers on board, because that is also another good way of registering the taxpayers. Now, when a taxpayer goes to a bank, for example, and is indicated to that because of lack of TCC from Kenya Revenue Authority, he cannot be registered, or an account cannot be opened for him or her, the taxpayer will come back to KRA seeking for PIN application, seeking for compliance, seeking to see to it that everything is done right. And that is as far as the informal sector is concerned. But maybe more so to add is that managing that group is not very easy. So how did we, by the way, determine that the following taxpayers belong to informal sector? This is based on our turnover. Turnover in terms of how much turnover within a financial year would qualify you to either be in informal sector, or what I would call the micro, small, and medium enterprises, or the option the other way around. Damacrine did mention to you that the large taxpayer unit, the medium taxpayer unit, these are well-established institutions whose turnover is more than the one for the informal sector. For informal sector, we take it from example, those whose turnover is between 1 million to less than 50 million. What would that be in terms of US dollars? We divide that by 100. Damacrine, then that should work out for them in terms of that statistics. Yeah, just for the sake of knowing, and that is critical. And for VAT, it is from a turnover of 5 million Kenyan shillings in a given year. Now, that is also critical. But let me go back to those linkages as we had started. One, Damacrine did explain categorically and very clearly why the first and fundamental POA is POA1. Having the right taxpayer register, that is so critical. Accurate data, accurate information, having the right information, having the right obligation in a given register of a taxpayer is fundamental. And why are we saying so? Because when it comes to even POA3, when you want to give the training must be targeted. You will not be training everyone. For example, you'll be training various sectors. In your country, for example, you could be targeting those in oil industry. You could be targeting, I don't know which other one it could be, but I'm tempted to believe that you are more in the oil industry as such. But those are things that are very critical for us. And I want you to see how that POA1 and POA4 link to each other. Having the right information, having the right person in the taxpayer register would mean that you know who is it who has filed correctly, who has not filed correctly, and that is fundamental. Damacrine, do I leave it at that point so that I can join you later on?
Thank you, Dr. Yiega. Just an addition before we hand over to Mr. Attalla, is that let me just point out some of the key strategies and why the issue of tax compliance certificate was critical to us. When we first rolled out electronic filing, the returns filing was not performing well. We were not having good turnout in terms of electronic filing. So what we realized is that, and this is now a linkage between performance outcome area 2, compliance risks, and performance outcome area 4. So what we realized is that we're having a compliance issue where taxpayers, we're having it difficult. We have done all that it takes to have them come on board and file their returns, but they're not filing. So we realized that in Kenya, the one critical thing that is important to every taxpayer is a compliance certificate. Even to a student, when you are applying for a loan as a student in Kenya, you need a tax compliance certificate. So what then we decided to do is partner with quite a number of institutions. As Dr. Yiega said, Higher Loans Board, that is for students getting loans. And the students are the ones running businesses in the country. They're the most who are operating in the informal sector. Then we have the banks. We have Kenya Power and Nairobi Water, who provide power and water. So we partnered with quite a number of institutions to request them to ensure that a tax compliance certificate is mandatory in their requirements for registration. And we also introduced that in our Tax Procedures Act to make sure that this is important. Now, I hope you can see the linkage between performance outcome area 2, compliance risks, and returns filing, because the impact of that is that we had now taxpayers coming forth, now that voluntary compliance coming forth to ensure that their data is accurate and that they have filed their returns and that they don't have any issues with the tax administration. That strategy alone made the taxpayers come forth to file returns and ensure that they have made their payments. The other strategy that we employed is in all our regions, we established support centers, tax support centers. Every region, we have a tax support center with technical staff, dedicated staff who are there to support any taxpayer who has an issue, to come forth and help them. So if I have an issue, I have two options. We have a well-established call center, a contact center, which now this is performance outcome area 3. We have a well-established contact center. So if a taxpayer is trying to file a return and they're having an issue, all they need to do is call and they can be assisted. And now we're establishing a chat bot so that as you're filing, if you're having a challenge, you can chat with someone on real time and get that assistance. So that also helps shoot our numbers up. And system prompts. So the iTax system, if we are approaching a due date, we have messages sent out to taxpayers reminding them that the due date for VAT is this number of days to come. So make sure you file your return and make payments. So those are some of the initiatives that we have rolled out. And there's something that in terms of the law for the informal sector, we introduced presumptive tax. We first introduced presumptive tax, which is a simplified tax, and then turnover tax, just to simplify the tax laws. And for this particular group, we explored presumptive tax and turnover tax regimes. Finally, in regards to corporation tax, the challenge we were having is that the companies, yes, were filing returns electronically. The large taxpayers and the medium taxpayers were filing returns. However, when we look at performance outcome area 2, compliance risk management, what we realized is that the taxpayers were either filing nil returns or filing returns which were mainly showing losses, that they were in a loss position for a very long time. So we were not getting the tax due. Each time you look at the returns, they're either in a credit position or a loss position, or it's a nil return. So what we tried to introduce after doing an analysis on this is, in terms of the law, we tried to introduce what is called as minimum alternative tax. So that if a taxpayer is filing, is in a constant loss position in terms of corporation tax, then after a certain number of years, we then expect you, if you are still running a business, after those years, we expect you to pay a certain minimum tax, whether you're in a loss or not. So that also improved the filing for the corporation tax, but it's still a challenge. This was challenged at Parliament because of politics. So the law is not in place, but I see Dr. Yiega smiling. We are yet to embark on that. So these are just strategies that I have indicated to show you what we are trying to do in terms of enhancing filing and payments. But I also pointed out the strategies so that you can see the importance of the linkages between supporting voluntary compliance. I've also brought out the linkages between risk management, compliance risk management, and the impact it has on filing and payments. And of course, without a doubt, the accuracy of taxpayer register. Over to you, Dr. Grace.
So Abdelhamid, if you allow me to ask a question, I think that Damacrine and Dr. Julius have presented a very important thread of conversation that in this conversation about the linkages between the different POAs. And I would like to build on that to ask a question to both Damacrine and Dr. Julius. These reform processes in the revenue administration are not overnight, right? These are processes that happen through a period of time. So let's pick, for example, the process, the decision of reforming to have a more digital system. How long did this process take you? And could you point the human factor aspect of that reform that is also important for us? What type of changes or transformations had to happen within the revenue authority, or in general, what type of transformations are expected that a revenue authority will have to go when they go through reforms like these?
With respect to reforms, this was not a very easy way to go. But the most important thing that we need to take a note of at this point in time is that, one, we had to start from the organizational structure. We had to create a division or a department that was reporting to the Office of the Commissioner General that was dealing with what we referred to as Tax Modernization Reform Program, TMRPS. Now, that in itself was so fundamental. And I will confirm to you that when that was happening, that was started in the year 2004, I'll get clear reference to that, that at that point in time, we had to also change the culture, change of the employees, because are the employees very receptive of the change? Now, and at that point in time, I happened to have been a member of that team. And at that time, I was also the one in charge of some training. And you know, technology was not very common by those years. So our employees were the first challenge we had. We had to ensure that we changed their attitude. We changed their culture towards being receptive to technology and being receptive to change. Because when we talked about reforms, it meant that there was going to be very little interaction between our employees and the taxpayers. And of course, that tells you something. When you want to cut that connection between the taxpayer and the employees, and in some areas we used to have employees who had taken some taxpayers as their domain, you know, as their areas, because they were working in silos, you understand? People in tax department were purely working in tax department. But now when Kenya Revenue Authority was formed, we brought in together excise department, customs department, tax department, and even at that point in time, we had road transport department section within Kenya Revenue Authority. So what is it that killed that kind of culture? One, when we brought in the reform of tax modernization program, it meant that one, the employees had to go some culture change. That is critical. Did they appreciate the change? We had to explain to them why change was fundamental. We were telling them, for example, that given the number of employees we had at Kenya Revenue Authority, and given the wider region of our country and the many number of taxpayers that we needed to engage, we had to do things differently. So one, I've mentioned about coming up with a program itself, with the dedicated managers who are in charge of those programs. And of course, we also had to bring on board the consultants. And of course, that means that people from what we'll call development partners came in. Now, development partners were good at that, but something that was so fundamental is what were we as Kenya Revenue Authority willing to lose to make it work? So one of them, we had to ensure that the taxpayers, the employees themselves has to appreciate the new change. Those who could not make it, what did we have to do? Train them and retrain them, and at some stage, some were able to voluntarily live on their own. But that was fundamental. Secondly, is to do with equipment, because you cannot undergo tax modernization reform without the right technology in place. So we had to also look for who are going to be the suppliers of the equipment that they're going to use, who are going to be the suppliers of the tax system that you're going to adapt. Yeah, before iTax, we had what we used to call ITMS. Yeah, so we had to engage countries that had implemented it before. For example, I remember for ITMS, we had to go to Chile, but iTax, we went to India. Okay, now all these are very critical for you if you want to come up with something like that. The reforms are important. Look at it in terms of technology, look at it in terms of the hardware, look at it in terms of the software, which is the way to go. And then finally, look at it in terms of your own employees. But now that you've taken care of your employees, you also need to take care of the taxpayers. How do you do that? The taxpayers must also be given capacity. So you have to come up with a program that is going to ensure that the taxpayers are taken through the training program so that they know that it is no longer business as usual. We are moving to a new domain. We are moving to a new area of dispensation. So we had to also come up with a curriculum that was going to address those nitty-gritty areas that would make them understand it. Dr. Grace, do you still want something about reforms?
No, I think you have touched. Yeah, you have touched those key points, particularly the one about change management. Mr. Abdelhamid, I think that you had other questions also from the delegates to ask to Dr. Julius and Damacrine.
Also, Damacrine, sorry, you want to...
Sorry. No, I just wanted to ask one question, and then I'll open it for the delegates to really ask, because I think you raised a lot of very important questions, and Damacrine also raised a lot of questions. One, which is, of course, the tax compliance certificate. Now, we do have it in the region, but you know, in Middle Eastern countries, the GCC countries like Saudi and Kuwait and Egypt, but it's mainly we see it when they are you're submitting a proposal for a government contract, for example. But you have basically made it more widespread. So if I go and open a bank account as an individual, I don't think I have to submit a tax clearance certificate, but a business will have to submit a tax clearance certificate to open a bank account. You said if you want to obtain a student loan, you need a tax clearance certificate. So you're saying that the general population will, in order to get the benefit of government services or even business services, are required to get a tax clearance certificate. Now, that's a very broad scope. Did you find any resistance to that? Because it's easy to say if you are going to, you're a business and you're submitting a government contract or bid, yes, give me your tax clearance certificate. Or if you want to release withholding tax balance from the Kenya Revenue Authority, you have to have a tax clearance certificate. Or if your clients withhold tax from you, you need a tax clearance. But I think you've done it more widespread. Have you met any resistance on that? And what was the outcome? How did you overcome that?
So I'd like to just first, Dr. Yiega, if it's okay, I'd like to just, and Dr. Attalla, if I could respond to your question, just an addition to what Dr. Grace added, then I can add on to your question, is that, Dr. Grace, maybe one key thing that I wanted to add to what Dr. Yiega mentioned is that in KRA, we undertook what we call a transformation journey, which covered about 3-4 years. And this transformation journey was looking at 5 thematic areas. So we had people, and here we're looking at internal and external, the internal stuff and external. Then under people, we also had culture. Then we had data governance, and we had business processes. There are 2 others that I seem to be missing out on, but what is key is that this had to be deliberate. We had to be very deliberate about the transformation journey. And as Dr. Yiega mentioned, in terms of automation, we moved from a manual process. And then in 2007 and 2008, we tried to automate. That was our first automation of the registration process. and filing. Then in 2008, we moved fully to automating fully into iTax. So that was 2008, but it took us quite some time before we fully rolled out filing to everyone. We started with a pilot to the large taxpayers, and then we fully rolled out to everyone in 2015. Then in 2016, we undertook a TADAT assessment, which helped us understand where our gaps were, and we then had to go back to the drawing board on the taxpayer register. So on to the question you have raised, Dr. Attalla. Of course, there was resistance. There was resistance in regards to tax compliance certificate. But what we did is we realized that, for instance, in regards to the students, the Higher Education Loans Board, they were struggling because they would give students, how it works in Kenya is that the board issues loans to the students, and when they complete their studies, they are supposed to pay back. But now what happens is that after they complete the studies, they are not able to trace the students. So when we approached them and show them how it will be a win for them. So what was critical for us was to get the buy-in of these government agencies and to show them how it will be beneficial to them. In regards to the banks, it was also important for them, especially in regards to the accuracy of their register. So we then looked at what was a win-win for them and how it would help them, and then eventually how it would work for us. So we had to get a buy-in from the Treasury as well, Ministry of Finance, and to show that this was ideally going to enhance revenue collection. And these interlinkages were very critical to us. So we received resistance, but we analyzed, and the policy team, which Dr. Yiega is now going to talk about, we have a team that looks at the policy. What are we changing in the law? What impact does it have? Who is the key stakeholder? How can we approach these stakeholders? So a team is put aside to do the analysis so that by the time you're rolling out the strategy, it is well thought out. And the critical thing is that we also have 2 TADAT assessments so that we have undertaken. We also look at the TADAT assessment, and when we are justifying this to the Ministry of Finance or Treasury, we are saying this is against international good practice. We have a gap in voluntary compliance. We have a gap in filing, and these are some of the strategies we can employ. We have an assessment that is showing we are doing poorly in these particular areas. So to enhance these areas, this is what we need to do. So convincing the stakeholders then became easier because we had an assessment report that was showing the gaps that we had to seal. Over to you, Dr. Yiega. I'm sure that there is more that you can add to what I have said.
I wanted to also start by addressing the bit of did we face any resistance? And I'll confirm that, as said by Damacrine earlier on, is true. We did face resistance. But in Kenya, we engage the taxpayers. So there's what we call the public participation. That is fundamental. As the policy people, we have to do what we call public participation. It is within the Kenyan law that you do not come up with anything without involving the public. The public must be engaged, and it is done for a period. I think it's normally 1 month or so, or beyond a month. And we invite them, they will come, they'll give their ideas. And in most of the cases, we make sure that the stakeholders are invited. For example, Damacrine did mention to you something about the numbers. How did you get those numbers? We have what we call the third party, third party aspect of it. For example, she did mention to you Kenya Power. We get data from there. She did mention to you other institutions that also have data. And for example, the Loans Board, the Higher Education Loans Board is one of our critical people. I'll mention for your example that I'm one of those people who was trained at the university using the Loans Board. So immediately I got employed, they had to look for my employer who would now give them back that money that they loaned me. And you see, the Loans Board has a database that is critical to us. We seek for that. And of course, this was done through the Finance Bill of 2006, where it was agreed that there will always be exchange of information among the governmental bodies. That is how we get the information from Kenya Power. That is how we get information from other institutions that deal with the taxpayers. And that is how also we get information from the banks. And that is why it is very difficult for you to go to a bank to open an account with them not asking for your tax compliance certificate, because now we are partnering in this. So you have to appreciate that bit of it. Stakeholder engagement, letting your stakeholders know that one, they have a role in the work that you do, that they are your partners, and that being your partners, they are supposed to share information with you. Now, that is linked to the policy. And because I did mention to you something about public participation, is that in Kenya, you don't just come up with a policy and issue it and pass it out. No. The question would be, and we are very, what's the right word? We are so democratic, you know. Anybody would run to a court of law and say, no, 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 no. That was not taken through public participation. And if it wasn't, it will actually be withdrawn. Or if they feel that the time was not adequate, they will withdraw it. Madam Damacrine mentioned here about the minimum tax, that any institution that is always in business and is always claiming that they make losses, we thought it wise to come up with minimum tax, where that even if you're making losses, there was a certain 1% tax that you expected to pay. And I can tell you were taken to court, and the court said that minimum tax was not constitutional. Yeah, and actually it is now in abeyance. We look at another way of approaching it differently by ensuring that there's public participation from the policy perspective so that we can bring it back on board, when now it will be legally free for us to do that. Now, I want to confirm to you how those stakeholders link to POA number 1. You see, how do we get our data? How do we get that data that feed into the tax register? You would take it that every taxpayer would come on board so that they would want to be registered, but that is not the case. So we go to the third party, we go to Kenya Power, we tell them, give us the people who are using the utility data, for example, because you cannot be living in this country and you don't have a power meter in your house that you pay. So now that is our data. We now connect the people whose data has been given to us by the third party to POA3. We invite you for a meeting in POA3. We want to train you first. We want to let you know that we are aware that you are existing, but you are not registered as a taxpayer. So the data from the third party is helping us in adding more people on board to ensure that we have accurate data in our taxpayer register. Now you can imagine when you're seeking for power, you will give your accurate details. You see, you will say your name, you will say where you live, you will say sometimes how much you pay in terms of, you pay monthly, yes, for utilities. We'll be able to tell that if you're able to pay that amount, then there's a possibility that you are also able to fall in a certain category. Now, third party is critical towards POA1 because it will give you the data that you're looking for. And I think there's something else I need to mention at this point in time, Damacrine. You will always remember that as Kenya Revenue Authority, we conduct what we call customer survey report or customer survey. The customers must be able to give a feedback on the services that we offer as Kenya Revenue Authority. And this is not done by us. This is, what's the right word? It is outsourced, yeah? It is outsourced so that the person conducting research is not biased. And then now they'll give us the details about our research. And this is always managed through Marketing and Communication Department of Kenya Revenue Authority. Once the report has been submitted, and each and every department categorized by the taxpayers in terms of their service to the people, because we are talking about service excellence, whatever they claimed was a challenge to them as a department, for example, income tax department, domestic tax department, we select our areas of weaknesses And each and every division that was affected negatively is asked within a given financial year to improve upon that weakness so that it doesn't drag us down. Now that is under marketing and communication, but is normally headed by taxpayer services, where I've been. By the way, today is my last day in taxpayer services. I'm heading to quality assurance in policy. Yeah. So what is so critical is that you can see the linkages that POA1, POA3, POA4, POA5, if properly implemented as per the TADAT policy, as per the not policy, but as per the TADAT recommendations in terms of the best practices. Oh, by the way, Damacrine, we don't call them best practices, we call them good practices. Then you will realize that you as a tax administration will go far. But allow me to mention to you something that Damacrine did mention at some stage, and is something that is still a challenge to us up to now. Damacrine did mention to you about presumptive tax. The idea behind presumptive tax was to be able to bring on board more people in the informal sector. Why was that important? It was important to us because it was being based on what we call single business permits. For example, within a county, I'm not sure how your country is being managed, but in Kenya, we have got two types of government, or two levels of government: the national government and the county government. County government is a given area of coverage. So for example, if you belong to county of Nairobi, there are those small traders who trade within the city of Nairobi. But before they trade, even if you want to do haircut, you want to do dressing, you want to do, dressing is called what? Tailoring, and you want to do maybe a small restaurant for people like that, you will definitely seek for a permit from the county government. And that permit is what we refer to as single business permit. Now, as Kenya Revenue Authority, from our policy perspective, we thought that the best way to bring on board these taxpayers was to make use of the single business permit from the county government to bring them on board. So we requested to collaborate with the county governments, but it didn't work out for us. And I'll tell you why it didn't work out for us. County governments are politically created, how do I say it? Because there's always a change of government after every 5 years. Those political leaders, for example, the governor, would not want to be seen to be the ones who are, who sold them, the one sold here is in quotes, who gave the information to the tax administration. So they would not give us the details. So we had tried having what we call memorandum of understanding with the county governments. It didn't work out very well for us. We tried for Nairobi. We even made more money for them. But now when there was changeover, as recent as last week, they now said, KRA people, go back to your institution. We can do it on our own. Now, those are challenges that you may be finding. But you can see that our objective was to get more people on board through single business permit, and also to make our taxpayer register accurate and clean. That was a challenge. So can I stop there? Maybe something else progressing. I saw some question from Zake, which was written. I'm not sure if I saw it right.
No, don't deal with that one now. It's just my thought process, because as in TADAT, we have been thinking about this particular issue and the data coming through. To what extent do tax administrations unwittingly encourage non-compliance? And given that it is CERT and you eminent delegates and participants, it's something that you can have a look at. And it's not only for developing tax administration, it's across the world. Through TADAT data, we can actually analyze and suggest what, but from a practical perspective, it's something that you can discuss because it can help you re-strategize and put in place reform processes, procedures that will be more helpful. That's just me. You don't need to deal with this right now. Thank you.
Thank you, Zaki. Thank you very much. Damacrine, do I hand it over to you now? You want to add something, or there are questions?
No, I'd like to hand over to Dr. Attalla or Dr. Grace to proceed to the next questions.
And I just want to see if any of the participants, attendees, they have a question for Dr. Julius and Damacrine, because I think they've raised a lot of very important issues, and I think we see it in our local practice. Again, as I said, the issue is we deal with, but from having the proper database of registering the proper taxpayers, to making filing easily, to basically connect with all segments of the community, so we get the proper tax data, and then to the filings and making it easy, and how we can make it easy for taxpayers to do it. Any of the participants have a question or a comment?
Mr. Abdelhamid.
Sure.
First of all, thank you, Damacrine, for picking up a live case scenario. So I think that's helpful. And thanks, Dr. Yiega, for putting up a comments and giving a right perspective from a policy standpoint of view. I think the biggest question which comes as everyone rightly looks at also, we are losing the central repository of the population. So we have a ghost citizens, technically what we call about, where they are living in the country, but we don't know about their identity or the whereabouts of them. So isn't that a national identification or some central data pool? I know it's a humongous task. It's not something which can be done in a year or so. It's a national strategy and works on decades, I will use a word, where if I have a national identity kind of a program where all tax structures, nationalities, even the incentive schemes which are sponsored or something like that, get connected together with one national agenda, will help and take the things towards quite a long space. One. And second thing, as Dr. Yiega has very clearly said, we're trying to collect the data from the critical resources, like electricity was one. Another, education was the second one, which you rightly gave a live example. So isn't that a long-term strategy which maybe countries should look at and to see how things can work in?
Maybe if I could come in, Dr. Rajiv, thank you for the questions. So I'd like to start with the ghost entities. And this goes back to the accuracy, performance outcome area 1, accuracy of our taxpayer register. I happen to have led a team to cleanse our data, just to understand what our data was all about, understand the accuracy of this data. And one of the initiatives we rolled out, but I'd like to mention that the TADAT assessment was very critical to us, because when we were looking at the accuracy of the taxpayer register, we were able to go back to the TADAT assessment report, 2016 report, and see the gaps that were pointed out in that report. Now, using that report, we were able to then identify various issues that we could address. So one of the things we did, we have an entity that registers all businesses in Kenya. So it's called Business Registration Service. They have the data of all companies. The other entity that we have in Kenya is the National Registrar of Persons. So they also register all individuals in Kenya. And we also have from the Ministry of Interior, we have a system that is called Integrated Population Registration System, which has the data of all the Kenyans and non-Kenyans. Anyone who comes into the country is registered in this system. So any passports issued, any alien IDs issued, any identification numbers issued are captured in this system. So what we decided to do, and the strategy that you point out of having a unique identity in the country is the best approach. I mean, that is the international good practice. But because of political challenges, that has not been achieved yet. But what we decided to do is that in terms to clean the data that we have in terms of the companies, we decided to partner with the Business Registration Service. So right now, the ITAX system, if a company is trying to get a PIN number, the company will not give us the details of that company. What we do is that there's a number that the Business Registration Service issues. All the taxpayer needs to do is enter that number, and the details are auto-populated in the system. So it feeds from the Business Registration Service system. For individuals, all I need to do is enter my ID number, and the data is pulled from the National Registrar Service. And if I have a passport, it is pulled from the Integrated Population Registration Service. So we did not get it right at first, no, because we rolled out the ITAX system in 2015. And it was interesting. We rolled it out, and then we had to quickly go back to the manual system because we realized there were too many issues with the accuracy of the data. And then the authority decided to undertake a TADAT assessment just to help us have a baseline of our processes, to help us understand the magnitude of these issues. So when we now got to the process of cleansing this data, we then developed business rules on how to cleanse this data to achieve accuracy. Once we did that, we also partnered with stakeholders. We had a lot of partnerships with stakeholders to help us in cleansing this data. Third-party data is very critical in helping you identify these ghost workers. So the challenge that we have had, and I know Dr. Yiega is going to experience this at policy, is in Kenya, it is not easy to get data from third parties. In our law, there's a national law against issuing information to
Information secrecy, I'm sure that's.
Yes, security. So yes, so we did try to put in our Tax Procedures Act, we tried to put a number of laws that gives us the mandate to get data from for instance, a very non-compliant, well, we view it as a very non-compliant area, the medical practitioners and the lawyers. So we tried to get data from the Medical Practitioners Board and the Law Society of Kenya. And we put it in our Tax Procedures Act that the tax administration has the authority to get access to this data. Failure to provide this data, then we issued certain sanctions. But because we were not in sync with the national laws, then for instance, Safaricom, our mobile provider, came back to us and said, no, because of this law, we cannot give you that data. So I'm pointing this out to just let you know that this is a tool that works very well. If you are able to get third-party data, which is pointed out in the TADAT framework under Performance Outcome Area 6, having to cross-match third-party data against what you have internally, it works like magic. So for instance, in the area of, let me use property tax. Let me use property tax as an example. We have been struggling to get information, or to get information on those who own properties in the country. So what we did is we tried to get third-party data from Kenya Power and Lighting. So there we had a breakthrough, and Nairobi Water, because if you have a property, then for you to get electricity, you need to get a meter from Kenya Power, and you need to get registered under Nairobi Water for you to get access to water. When we cross-matched this data against what we have in our system, we were able to get those who ought to be paying taxes and they're not paying taxes. So maybe to you, Dr. Rajiv, is look at the various sectors that you have. And then in those sectors, identify some of the key institutions, and they're listed out in the TADAT field guide under the performance outcome area 6 on third parties who can give you critical data that can help you identify these ghost workers. So yes, we've had challenges in regards to law, but maybe from your end, it might be easier because it's still a challenge we are experiencing to be able to get third-party data. The third-party data is very critical in sealing those loopholes. Thank you. Dr. Yiega, I don't know if you have any addition.
May I ask just a question? Did you encounter the same problem with bank secrecy laws? Were the banks willing to share information with you? Because I think a lot of countries, there is always that problem that the banks don't want to share information. I remember in Egypt, in order to share information with the tax authority, you need to get a court order from the Court of Appeals to disclose the details of a bank account. Did you encounter that problem with the banks, or were the banks willing to share information readily with you?
Let me say that it was not easy to get that data, but what has actually worked out for us is that I did mention to you about the stakeholder engagement.
Yes.
We had a recent scenario where during the pandemic, for example, we came up with what we are referring to as a credit guarantee scheme. And what does that mean? It meant that the pandemic led to so many losses by various institutions or various businesses. And so those businesses that wanted, again, to come up in support, we had to engage the banks as the tax administration and treasury to see to it that they were supported. Now, in the process of supporting those people, that the government was to dedicate a certain amount of money at the treasury, which could be borrowed by the traders through the banks. You know, you can see how there's a linkage between that and the data. Okay. Now, the banks now see us as part of their stakeholders. And at the same time, even us as the tax administration, we do not misuse that data. We treat it with confidentiality, and we ensure that the taxpayers are well treated. And that is something that is very critical. Taxpayers will only get to be a bit hesitant depending on how you handle them. But I can confirm to you that as tax administration, we have it as part of our national value to ensure that the taxpayers are treated with respect that they deserve. So we have been engaging the stakeholders, including the banks. Like now we have 14 banks that, of course, do share with this data of those traders who borrow money through that credit guarantee scheme, in the sense that that money borrowed, government stands to kind of insure 50% of it. So even if the taxpayer does not give back all the monies they borrowed from the bank, the risk part of it is that is taken care of or covered by the government. And that's why we call it a credit guarantee scheme. That has led to a very good relationship between KRA and the banking institutions. Yes, something else that I think is so critical here is that we are also continuously learning from other stakeholders. So for example, we have shared a lot of exchange with other national tax administrations, for example, the other countries like Norway, other countries like, I've talked about Norway, there's another one is called Switzerland and all that. And we kind of want to adopt their practices that they do. You see, in other countries, when people are born, they are born as taxpayers. In our country, you are born first before you become a taxpayer. Now, that is where the challenges are. So we are now trying to see how do we make use of these things, bit by bit, to progress it. And maybe Damacrine referred to this earlier on, when as a government, we're trying to come up with what we call a unique identifier, what we're referring to as Huduma number. It meant that everybody in Kenya must have a unique identifier. And that was a good way of ensuring that everybody becomes a taxpayer as long as they turn the age of 18. But as indicated earlier on, our country being too legalized, I mean, everybody can go to court, take a lawyer and go to court and stop something. That Huduma number was stopped. But we still believe that it's one of the best ways to go. I wanted to just confirm something part here that my colleague Damacrine brought on board, the BRS, Business Registration Services. because this is very important. All businesses are registered through BRS. And now BRS and Kenya Revenue Authority are partners. So some of my officers in taxpayer services have got access to the BRS system, where they are able to see or get the information for any company that want to do business in Kenya. They have that right to see information, accurate information, such that by the time we are bringing on board this taxpayer, the tax register is going to be occupied by a taxpayer who has given accurate data as far as that is concerned. So what I want to stress so much for you, ladies and gentlemen, is that you must conduct a lot of stakeholder engagement. Talk to the lawyers, talk to the medical doctors, and maybe just to confirm that we did engage the doctors this year in February. Finally, they agreed to come on board through their Kenya Medical Association, and we trained them. And they realized that after all, we are not enemies. We are actually trying to make it easier for them, because even them, they're in businesses, so that they don't suffer losses in terms of taxable income that they can go through. Thank you.
Okay. Well, thank you very much. I think we're past our time. Thank you for taking the time. I think we need Dr. Grace a second session with Dr. Julius and Damacrine, because I think there's a lot to learn from them. And what you say sounds very relevant to our communities or our societies. Talking about the doctors, for example, in certain countries, there is always a problem with the professions, getting them to register and pay the proper tax. And of course, you know, when you talk about doctors, you have to be very sensitive, because they're the creme de la creme of the society. You can't just go and say, okay, you have to do this, you have to do that. You don't do that with the doctors. But I think we need more time with you and Damacrine. So I hope you will be generous with our time. We'll speak with our colleagues in TADAT. I think we've enjoyed today the discussion. I've certainly learned a lot from you both. I think your experience is very relevant to what we are doing here. There is more in the points that I had sent to you, but I think we look forward to more interaction with you. I think it's important that TADAT links you with the tax administrations in the region, GCC, North Africa, and other parts, because I think sharing information, we learn from each other, but I think you are way step ahead than a lot of the countries. And I think if we work together, we will all learn together.